Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday, the 5th of January 2021, and we are reissuing our silver price forecast for this year. Now, nothing has changed compared with the video that we published yesterday, but we are changing some of the back office data as we found that YouTube did not promote our video at all yesterday, and we suspect it's because of some of the keywords tags and the use of the name Illuminati Silver in the title. We are therefore reissuing the video today, which will be exactly the same as yesterday's except for the introduction. So if you've listened to yesterday's, unless you wish to recap, there's no need to listen to this one. If of course you didn't see or hear yesterday's video, then here we go with the same information. Hope you enjoy it. Now, before we go into the forecast, just a brief reminder that yesterday we published our 2021 gold price forecast, and on Saturday, why gold could double in 2021. And we've placed links to each of these below. Now, in yesterday's gold forecast, we highlighted what we termed an escape clause right at the beginning. The conditions of that clause equally applies to silver. This is what we stated. Quote, to predict any price of any commodity up to 12 months in advance is, without some form of godly omniscience, an impossibility. Unless, of course, you own 100% of that commodity, as in a monopoly, and therefore can dictate the price. Where precious metals are concerned, it is even worse to some degree, because there are multiple reasons why people purchase gold and silver. End quote. We then went on to emphasize that gold is purchased primarily for finance and investing purposes, both in physical and paper form, and now arguably digital form too. Dentistry and medicine, electronics and computers, jewellery, and even medals and statues. And we also said not to forget the spirit of ecstasy, which some Saudi Arabian princes' Rolls-Royces currently possess. Well, frankly, the same applies to silver too, except that silver has a considerably higher industrial application than does gold. Over recent years, we've seen that the industrial demand for silver has ranged anywhere from 50% to as high as 60%, with it currently towards the lower end of total demand. And we suspect that moving forward into 2021 and beyond, this industrial need is likely to increase, especially as the world is moving on to newer, greener technologies, such as electric cars and greater use of solar panels, not to mention, of course, the vast array of electronic and medicinal products. So whereas with gold the largest reason for demand is finance and investment, for silver it is industrial, with silver being regarded as a substitute for money falling down the scale when compared with gold, at least in physical terms. Now, having said that, of course, there is to some extent an inextricable link between gold and silver, as far as its monetary purpose runs. And so generally, in the majority of cases, though not all, silver's direction tends to follow that of gold. This, to those who have followed these precious metals, will be no surprise. Now, we suspect, though, that as the decade advances, this may to some degree become somewhat less the case. As the world enters a new realm of industrial greener technologies, where silver will become an increasingly important component. So let's take a look at what factors affect silver's prices. Many of them, of course, are similar to gold. Number one is the value of the US dollar, as silver is priced globally in US dollars. And the level of stimulus and QE coming out of governments and central banks is undoubtedly going to have an adverse effect on individual countries' currency values, and arguably especially the US dollar, though some advocates will state that the dollar will be the go-to currency in times of crisis, having said that, we have seen the dollar index fall from above 100 to its current level in the late 80s. Mine supply versus physical demand. The mining supply of silver has fallen each year since 2015, with 2020 forecasts being as much as 5% down on 2019, at least according to the Silver Institute. Now, of course, the coronavirus pandemic plays a large part in this, affecting the ability of mines to open because of lockdowns, etc. That said, we also, on the other side, have to be mindful that this year was an exception, and also the first year really where silver prices have significantly risen, though they did go up the previous year, with some considerable stealth, and therefore one does wonder what would have been the mining supply this year had the pandemic not occurred, as of course those mines which had perhaps previously closed seams or decided not to enter into new developments might have been encouraged to do so as the silver price rises, though new mines will take many years to start. Would we have seen higher mining figures, though, from existing miners because of higher prices? We suspect that could have been a possibility. Silver's own price. We've seen that as silver prices rise, demand, from the Far East especially, tends to wane a little, though this is more so the case with gold, as we experienced for a couple of years in India, where they swapped out gold jewelry and products for silver ones. Now, speculation, often paper trading, such as ETFs, which frankly have been a major driving force for silver prices this year, as well as for gold. And then we have to look at the value of competitors' products, such as equities, cryptos, bonds, and gold itself is a slight competitor to silver, though this is less prevalent where compared with gold. In other words, people perhaps tend to invest in higher risk-bearing assets, such as equities and cryptos, slightly lower risk with bonds, as opposed to silver, unless, of course, then sentiment changes and they wish to move to a more risk-averse type of asset. Real interest rates and inflation, of course, therefore affecting dollar value, global geopolitical events, and the proverbial black swans. So all of these have similar repercussions for gold. Now, the one factor that we've missed from this list, which in our view is going to become, if not the most important factor, then an incredibly important factor, and that is industrial demand due to economic growth and industry transition, especially as we start to move out from this absolute level of what we would call depression because of the COVID-19 pandemic. An exciting factor for us, though we're not getting too carried away, is the electric car. Many governments around the world are moving away from petrol or diesel-based cars to hybrid and then full electric cars. In the UK, for example, by 2030, all cars produced here are destined to be electric. Now, in 2019, we saw some 2.1 million electric cars being produced. And because of the COVID-19 pandemic, car sales for 2020 have fallen. But a similar number of electric cars are still expected to have been produced because as a proportion, their level of sales will rise. It's estimated that these figures will rise to around 31 million by 2030 by some analysts, which is a 15-fold increase. Now, in terms of silver use by the auto industry alone, it's estimated that this will rise to around 70 million ounces compared with about 45 million a couple of years ago. Again, these figures are not sacrosanct and estimates do vary, but the point that's being made is that you are potentially looking up to about double the use of silver over the next 10 years for the automotive industry. Now, these are various assessments constantly being made, and we also have to accept the fact that most businesses, as we have experienced in the solar panel industry, will always attempt to reduce costs, and when, of course, silver becomes too expensive, will do what they can to use less. Solar panels have reduced the level of silver within each panel. But that said, of course, demand for solar panels are rising and are projected to continue to rise. But notwithstanding this, it certainly is an exciting time moving forward, and one of the many reasons we've stated that the 2020s will be the decade for precious metals. Also bear in mind that gold too is used in electric cars, though obviously to a much smaller extent. Now, at the time of writing, as we predicted in our weekly update published last Friday, we have seen both gold and silver prices rise this morning on opening, following through on Thursday's strong performance towards the end. Now, silver is up more than $1 at $27.48, though we suspect it might fall back a little. And it's worthy to note that silver ended the year at $26.42, up 47.4% for the year. And this follows a 15.3% increase in 2019. A phenomenal performance, and in percentage terms, the largest annual rise since 2010, which in itself saw an 80% increase following a 57% increase in 2009. Of course, some people might say, well, does that mean 2020 has now seen the bulk of the increase, having followed last year's increase of 15.3%, so a similar situation compared with 2009 and 2010? We suspect not. We believe there is further to go. So where is it going then in 2021? Well, in terms of the highest closing price for each month, the longforecast.com predicts this will occur in November 2021, and we will see silver reach $37.51, with its lowest closing monthly price actually being January, ending this month at $28.46. In fact, it sees silver then rising right up until April, reaching $32.66. In terms of high for the year, though, rather than monthly closing prices, in terms of high for the year, it predicts this will again occur in November, and we will see silver touch $39.39. Now back on the 8th of November, InvestingHaven.com predicted that it expects silver to spike north of $30 in 2021. And in September, CIBC Bank predicted silver will reach $32 in 2021. Looking at a few other institutions, Citibank predicts silver will reach $40. So does Goldman Sachs. Capital Economics believes it will end the year at $27. Gov.capital signals that silver will rise to just shy of $35 and will end the year at $33.73, but will jump to $44 in early 2022. Capital.com are predicting potential highs as large as $75 an ounce, with a more reasonable likelihood of $46. Saxo Bank has predicted that silver will surge to $50 in 2021. Sharing this high spot of $50, we also have Mitsubishi predicting $50, Nikkei Research $55, Technical Traders $60, and others a little less enthusiastic. We've mentioned CIBC at about $32 and Commerzbank also at $32. What is pretty common, though, is that most institutions are predicting higher silver prices this year compared with the current silver price. So what then is our assessment? Well, currently gold is standing at $19.42, silver's $27.50, providing a gold to silver ratio of nearly 71 to 1. We do see silver decoupling slightly from gold, and we are envisaging, and the best assessment we can make for this year, is that we can see silver peaking, if you like, to reach a gold to silver ratio of 60 to 1. Now, we've already stated that we expect to see gold reach $2,300 at some stage this year. And would not be surprised, though we're not forecasting it, if there was a spike to $2,500. And so if we apply our 60 to 1 gold to silver ratio, and we're going to make an assumption here that the 60 to 1 occurs when they peak, which isn't usually the case, this would imply a silver price peak at our expectations of $38. But should $2,500 be reached in gold, then this could push the price up to $41 this year. Now, between the two, we have $40, which of course is a psychologically important level. Less so for technical traders, but more so for those dealing with psychology. And so if we were to see silver enter into that $39 territory, do not be surprised to see it push that $1 more into $40 or just above, even though we suspect it would then fall back. So our prediction, essentially, is that we are likely to see silver, at least at some point during the course of this year, reach $38, which is extremely bullish for us, and is more likely to end the year just off that high, somewhere close to the $35 or $36 level. But again, with a spurt in store, potentially, for 2022, which is where we actually see its price rising further. Now, as far as the low is concerned, this is really difficult to calculate, because at this precise moment in time, we're looking at about $27, and we know that during the course of the next 2 to 3 months, based on historical performance, silver is expected to rise. But we're also very much aware that silver will be, and as is gold, victim to US dollar price movements. And whilst we do see the US dollar falling over the course of this year, we do not necessarily see it falling considerably very soon, if that makes sense. And so we could actually see a slight strengthening of the US dollar at some stage moving forward, which could push silver below its current level of $27.50. Now, we do not believe that $20 silver is on for 2021. There are too many factors ensuring it's going to remain above that level. Though we would not be surprised if silver did at some stage during the course of the year dip to $24. If it does, we would certainly be buyers. The pandemic and the solution to the pandemic is not as yet sufficiently cast in stone for us to have a precise timing. And it could very well be the case that the economy could be hurt more in the next month or two than it has been so far. If that is the case, then of course this really depends on what President Biden actually does after his inauguration. If he is successful in putting more stimulus into the economy, then of course this will once again act as a tailwind for precious metals, though the industrial component for silver will fall because demand will fall during the lockdown period. That said, of course, when we come out of this economic recession, and many forecasters are saying that will happen certainly in the second half of this year, if it doesn't happen sooner, then that will again be very positive for the economic industrial side for silver, but could arguably be detrimental for silver demand on the monetary side. So we have a considerably large spread this year of between $24 $138. Now, this is not totally out of the ordinary if you bear in mind that this year we saw silver as low as $12 and then rising to very close to $30. So this differential of 24 to 38 in percentage terms is a lower percentage than that. So if we are looking at a rise currently of silver from its current level of just over $27 or close to $27.50 and touching $38, we can see that that percentage increase is 40%. And we are comfortable with that as silver at its peak. Though, as we've said, we probably expect it then to fall back towards the end of the year, closer towards perhaps $35. Will we be right? Well, let's wait and see. One thing you can certainly rest assured is as circumstances change, we shall provide you with an update. And if we are clearly well out of the ballpark, then we will openly admit that. Do we see silver touching $50 this year? Only if, as we produced in yesterday's video and the one the day before, Andrew Maguire is right about the Basel III implications causing a reassessment of the gold value. Anything up to double the price. If that were to occur, then of course we would then see $50 silver. But that's aside, and any significant black swan, we are comfortable with our $24 to $38 range. What do you think? Are we grossly underestimating where silver is likely to go over the next 12 months, even though $38 is considerably higher than what it is now? Do you think we're over-optimistic? And perhaps you see silver falling back towards $20. Do share your thoughts. They would be appreciated. And meanwhile, if you haven't already done so, please subscribe to this channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.